These are the Treasury trends Christmas 2013, collected from our meetings in London and other discussions we have had within the Treasury Peer community.
The first challenge is regulation. Guess if the corporate sector is fed up of the regulatory frenzy. And few with proper insights really start to wonder if it will provide anything else than more friction into the financial system.
Most pressing now, of course, is EMIR, which is short for European Market Infrastructure Regulation.
It has been issued by ESMA, one of EU's many regulators. And EMIR is appallingly bad. The quality is very low. In fact, you can detect ESMA's arrogance in that it lacks instructions, it lacks planning, it lacks information, and honestly doesn't always lack relevance. And the problem is that it's a very pressing timeline and it has to be implemented before February 12, 2014.
EMIR is about collecting detailed information on outstanding derivative positions into central repositories to be analyzed for avoidance of another crisis. Few believe, however, it will work as intended. There are too much data and unclear responsibilities.
EMIR's poor quality may be the tipping point for the corporate sector's acceptance of more financial regulation without proper and competent and independent government structures surrounding it.
EMIR receives the lowest available score within Treasury Peer community.
Dodd-Frank is EMIR's cousin in the US and it has many similarities. The quality is low, the unclear consequential analysis and unclear relevance.
Treasury Peer supports our community with tips and tricks for implementation of EMIR. So follow us on LinkedIn and on treasurypeer.com for more information.
SEPA, Single European Payments Area, is another topic that has a pressing timeline, but we don't foresee any severe disruption. SEPA is actually a very good thing for business.
Anti-money laundering, AML, is seriously disrupting the global payment systems.
Yeah, AML and all its cousin is expecting all of us to be terrorists or hiding terrorists and not paying enough tax. But it can turn out that AML and his cousins are the biggest terrorists on the board. It forbids payments from Iran, paying for medicine, and sending money to staff on the ground in Sudan for charities is stopped. And even completely legal transactions by credit card from the UK to Sweden amounting to €3,000 are stopped from some obscure terrorist limit.
The conclusion is that the unintended consequences of the financial regulation is piling up, hindering business from growing into more jobs.
Yeah, and the second point we are discussing is cash management and the quest for the most optimal setup and solution continues. Some emerging markets are opening up and previously trapped cash can now be allocated more efficiently.
One example is China, opening up to facilitate business on many fronts. It's very important, though, to be well connected to make use of the liberalization. And there are still much trapped cash in countries like Venezuela, Iran, Argentina, Belarus, Egypt and Sudan.
And the third topic is funding. Large corporations for the moment don't have any problems finding funding.
We know that can change anytime.
Yes, and so despite the fact they have cash, they don't borrow access to cash, they don't borrow opportunistically because we don't know where to store the cash. The banking system is very vulnerable, and on top of that we have bail-in.
It's a lot of work to earn the money in the first place, so we don't want to lose them to the shaky banking sector.
The fourth challenge is organization, and the trend of increasing importance of the Treasury organization continues.
A treasurer must master sales, business modeling, procurement, etc., plus Treasury core tasks.
Yeah, and this puts very much higher and different requirements on Treasury leadership than previously.
The fifth issue discussed is risk management. As a consequence of the economic vulnerability and the changing role of Treasury, the risk management has become more tacit and more complex.
The sixth challenge is IT and Treasury management systems. The expanded role of Treasury means that we need massive process improvements using IT so we can free up the time of Treasury staff. And a new generation of Treasury management systems is gaining acceptance, and Treasury technical integration is, as always, very, very complex.
And other topics we covered
were, for instance, fraud in payments, how to invest the cash, rating, bank account management, capital structures, and cash forecasting.
Okay, Magnus and I are very grateful for being able to work and meet with you. And we would like to wish you a great Christmas and a wonderful and successful 2014. And again, we hope to see you next year in our upcoming events or in any other format. And we wish you a Merry Christmas and see you soon.
Yeah, take care out there. Bye-bye.